Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez, and today I'm very happy to be here with Brian Mehler, who is the CEO of Stable. Brian, thank you for coming on the show. How are you today?
I'm great. Thanks for having me.
I'm super happy to have you here, man. Uh, Brian, my first question to start off the interview is for people that are not familiar with Stable, how would you describe it?
Sure. It's a question I get a lot and always happy to answer.
Nice.
Stable's a layer one blockchain. The protocol layer, we're focusing on building payment rails for the future. A lot of that is focused on how we're changing the way that stablecoins move from peer to peer, but also on the institutional side. I think one of the big things I always like to highlight that is central to what Stable's building is that instead of having a volatile gas token, we changed that out and we're using USDT as our native gas token. So removing some of that friction that currently exists with using stablecoins across different chains right now.
Okay, awesome. And then I guess my follow-up question would be, what problem in the stablecoin ecosystem did Stable set out to solve? And how did you guys settle upon USDT as the native token for Stable?
Sure. I think it was pretty easy decision when we were deciding to change the way that people transact with stablecoins in terms of the ecosystem. One of those things was, as you mentioned, like the volatile gas token. That was a non-starter for us. So when the team was coming together, that was the first thing they identified as a pain point in the market, where people were complaining about, whether they wanted to send money on one chain and then another. They were then ending up with different tokens from different layer one protocols and having to keep that basket of change. Normally you keep in your pocket and you throw it away. And that was kind of how people were feeling with using layer one protocols, where they were ending up with different tokens and different basket and different wallets. And it was a lot to keep in charge of. So we wanted to make it simple. So we abstracted a lot of that out on our peer-to-peer app that we're launching later this year. And then on the institutional side, we noticed there was a gap in the market in terms of the predictability of gas. And when you have large financial institutions trying to embrace stablecoins, when you then have to explain to them that there's another token they need to buy and worry about the FX risk or the spread of that token, it became a little bit more complicated than those banks and those financial institutions really wanted to take on. So they were staying with the traditional rails. So we're really trying to advance the way that people are using stablecoins by simplifying the process, keeping within stablecoins within the network, and speeding up the process by which people are going to be onboarded onto the system.
Okay, awesome. Thank you for that response. Can you elaborate a little more on the specific shortcomings that blockchains have right now dealing with stablecoins and how you guys are solving those issues with stable addresses and how they're different from general purpose chains?
Sure. I think all of our first experiences have been on a general purpose chain. So with layer ones, they're used for a variety of sources, whether it's playing games or you're sending currency or storing data. And the problem with that is it gets really congested. And so whether you're driving in traffic or trying to get in line for something at a store, no one really likes that friction of having to be one of many. And so we wanted to make sure that when we're building out stable and designing what we call the stable chain, we wanted to have a system where it's purpose built for payments. So that includes the transaction speed and also the gas that I talked about with USDT. But the shortcomings of the current blockchains out there was that it was unpredictable. So when you're playing a game, you can kind of sometimes deal with the frustration of an internet speed slowing down or a little bit of lag, and it becomes pixelated, but eventually it goes back. But the thing is, that may be fine for games, but it's never something anyone wants to have when it comes to sending money. You want to know that the money was sent and it was received and its finality is confirmed, rather than wondering what's going to happen in 10 or 13 minutes. And so we removed all that friction by making a system that is purposely built, as I say, for payments.
Amazing. And then how does USDT in particular as the native token improve the user experience? And how does that help accessibility in emerging markets where USDT is being adopted in great numbers?
No, definitely. I think I know that there's a number of different parties that are focused on, helping the unbanked become banked or helping people get access to different financial tools. Because we believe, and I think that's shared by a number of parties, whether it's USDT's team or the Tether team is really focusing on how do you broaden the reach of money and make it fair and equitable and make sure that people are able to have the tools, not just at the top of the market, but also throughout the whole scale. So when we decided to build our chain and we baked in USDT at the core, that was our specific change that we're making where we're committed to that USDT. We feel that if you're going to be paying fees, you should know what they are, and there shouldn't be an externality or another volatility that you have to assume when you want to send your money. So in terms of changing the emerging markets and other players in the cross-border payments world, what we really want to focus on is that they can't be subjected to having another volatile token, because if you're sending small remittance across borders, the last thing you really want to do is then have to spend more money in fees or congestion charges that really offset or take away from the money that you're remitting home.
Yeah, or I guess deal with delays if you don't want to pay the fees and then wait until the
Exactly.
fees go down. Yeah. All right. And then I guess like what technical and economic considerations allow Stable to offer free P2P transactions? Like how does the fee situation work on Stable?
Sure. It's an important part of what we built, and so through our model that we built in terms of like the tokenomics that we rolled out is that we're covering those gas fees. So peer to peer, that's from me to you or from you to any of your friends across borders. You're able to send that money without the fees. So it's the gas is being covered, and you're able to transact without any friction. So on, as I mentioned, like the mobile app that's launching later this year, and our wait list is out right now. When you want to send $100, you denominate that in $100, and you send that to who's ever receiving it, and that's what they get. There's no calculations. There's no other tokens you buy. You just send $100 and they receive $100. So that's part of like the way that we structured the chain. And so those peer-to-peers are going to remain free because of that.
And like, I guess like for spam and things like that, like how does it work when it's feeless?
Sure. So obviously we want to make sure that we keep spam and other things out of the network. So a lot of that has to do with the onboarding onto the wallet. So again, it's within the wallet. Those are going to be the gas-free charges. So in order to be onboarded, there's a little bit of just like human checking that goes on. And so once you're on that network, it allows you to operate in the gas-free transaction versus it's not just on the chain where you're building natively. It happens. It's going to be in a safe environment that is protected from spam.
Okay, thank you. And then I guess like from my perspective as a USDT user and not an institutional USDT user, are you guys more focused on like retail users like myself, or are you more focused on like institutional clients? And then also like how important is it for Stable's guaranteed block space, like in practice for these institutions to make like mission critical transactions?
Oh, definitely. I would say that one of the joys of joining this team has been the wealth of knowledge we brought in, and with that, we have a very large team that's focusing on both of those aspects. Because we saw in order for this to be successful, you couldn't rely on just one aspect. You got to get the peer-to-peer side in there as well as the institutional or the enterprise clients. And so we make sure that we're focusing on both those, that duality that exists in the market. We're making sure that we're tending to both those sides, mostly because on the peer-to-peer side, there's a lot of value that's being created and a lot of help that's being done, being able to have gas-free transactions in the peer-to-peer side. But at the same time, the network needs to have certain liquidity aspects and certain growth aspects that we're hoping to attract. So that's where the enterprise comes in. And you mentioned the guaranteed block space. That's our approach to attracting those institutional clients. A lot of it is that they need to have their own lane where they can execute those transactions with the assurance of the factors that they're normally used to having that matter most to them. It's usually the transaction time and the fees they're going to pay. And we do that through a number of different attributes. One is going to be that guaranteed block space has a certain allocation in every block that's going to be fluctuating according to the usage to make sure that they're able to transact in that next block and have that guaranteed closure. But then in addition to that, they're also able to establish their fees, whether it's on a day, a week, or a month basis. That's going to be kind of like more of like a subscription model when that's launched to allow them to interact in that fast lane on the highway. So everyone's going to be on the highway. We're just going to have that, the fast lane off to the left or on the right, depending on where you live, and have that ability with that slightly extra higher fee to move quickly. So what we don't want is when there's ever a spike in the network, those transactions that are, tens of thousands of transactions that are going through, we don't want them to be delayed because of some congestion on the network. They're always able to transact at the time and speed which they're used to, so it can help establish their their business and also their predictability in acting as a good client or a good receiver on their side.
Okay, thank you, Brian. Um, Another thing I wanted to ask you about is that stable is described as regulatory aligned. Can you explain, like, in your vision, what that means?
Yeah, I think regulation is a part of what we're all living in. We saw the effects or the benefits of regulation in the U.S. with the Genius Act being launched, where it led to, while stablecoins were already on an uptick, it led to even a larger boom, and a lot of players have come to the market now that there's regulatory framework for them to exist within, and so they're able to embrace stablecoins, embrace crypto, and embrace blockchain technology by having that regulation. So we've, on our side, we're definitely spending a lot of time working with novel approaches to enable certain transactions that allow people to make sure that they're remaining regulatory aligned. We want to stick within the guidance that are provided by the regulators in a global sense. So we're doing a lot of work on the backside, and we have a team dedicated to this to make sure that we're going to be hitting all the marks that are necessary to get not just the peer-to-peers to keep them safe, but also the institutional clients onto the chain.
Brian, like, we've seen Mika come out with like regulations for digital assets, and then you just mentioned the Genius Act. What is Stable's like opinion, I guess, on the current regulation that's being passed in terms of stablecoins?
Sure. I think we're excited to see the growth. I had the chance. I was at KBW a few weeks ago when we really rolled out a lot of our announcements, and it was our first big in-person event that we did. I got to share the stage with Bo Hines. He's the CEO of USAT, and with that, we got to spend a whole 45 minutes talking on stage with uh, the individuals about what was going on in the stablecoin market, and we see that explosion. So with this regulation, it's actually the it was the holdback that people had without regulation. They were too afraid to transact. Now with regulation and with Genius Act, there's the reciprocity that other governments can interface and intertwine with it, allows of the explosion in the market that we'll see. And I know that our side, or me personally, we really talk a lot about like when that next milestone for AUM is going to come up. And so I think with regulation, we can continue to hit those next milestones. And I think the regulation allows stablecoins to become commonplace, or also just a factor of life that we're all going to be dealing with soon.
Okay, awesome. And then Stable has like an EVM compatible virtual machine and a specialized SDK. How do those tools like help developers build things on the Stable ecosystem?
Sure. In addition to building out Stable using USDT as a native gas and focusing on both enterprise and peer-to-peer transactions, another thing we wanted to focus on was the developer experience. Those developers are crucial to get new applications built or new integrations built and help people embrace using Stable and using the Stable chain. So we want to focus on a network effect of having an EVM compliant or compatible system, because that allows already have experience in the EVM space to start building day one. In addition to that, we located, or we built out our SDKs to be specialized to make sure that they're able to transact on day one. So there's a little bit of changes that we have where instead of having that volatile gas token, again, you're just going to be using it USDT, and it lets you deploy your current Solidarity stack and ship familiar like fintech UXs and stuff like that on day one. So there's no complications that you would normally have with like a gas onboarding or FX volatility. So we feel that we're making it not just a great user experience or an enterprise experience, we're also making an excellent developer experience. So I think those three tent poles is really what's going to change the way that people are using stablecoins without having to add extra layers of complexity and trying to explain what a volatile gas token is doing.
And we've seen like the rise of a bunch of other like Web3 chains that have EVM compatibility. Does Stable have like bridges or integrations with any of these other chains in like the wider Web3 ecosystem?
Yeah, I think one of the key points as we're looking at that developer ecosystem and the user ecosystem was understanding that there were other tokens out there on stablecoins that people wanted to transact with. So one of the key parts that we rolled out is the layer zero. So with layer zero, you can move the tokens between one chain to another in real time and save on all the complications of there. So we focus on not just the EVM side, but also the layer zero side. And so we feel like Stable can become the place that all stable coins can come onto. We don't want to be exclusionary. We don't want to be too difficult to transact on. Rather, we're making it the place where money will flow naturally. We talk a lot about how the speed of the internet is increasing or AI development is increasing. And the funny thing is that regardless if it was DeFi or traditional finance, the speed of money wasn't really increasing. And we don't know like if the incentives were misaligned. We have our conclusions, but we wanted to change that. So that shift that we're doing in the market to enable people to use money at the speed of the internet is really what we're focused on. So having an EVM compatible system and also focusing on building out tech that was user friendly, but also user friendly, that's really at the core of our mission right now.
Okay, amazing. Another question I have is, like, ever since I've been in crypto, people have talked about the remittance use case and how crypto is going to dominate the remittance industry, but we haven't really seen that happen. I think part of that's volatility and part of it may be this friction that you're describing. How can stable reduce like remittance costs or that friction and kind of like fill that role and maybe be the one to like crack that nut that's been very tough to crack?
Totally get it. I think, as I mentioned, remittance exists. So the problems with finance exist both in traditional finance and also in DeFi. A lot of it just boils down to fees and time, because I think everyone says time is money, and that's one of the things that wasn't being solved for. I think there was a lot of players in the market and a lot of situations where they could take a clip or fee, and that was reducing the amount of low volume or low threshold transactions in the market. And so with the remittance, what we really want to do is serve those explore those underserved markets. And with those underserved markets, when we're able to provide a remittance feature or tool, it allows it to be instant. So we want to get we want to make it so it's seamless to do those transfers, and also with less than second finality, we're sure that we can help people move money at the speed that they want to transact with. Because no one likes to have to do a test transaction, wait 15 minutes, send another transaction, confirm that the wallet address is the right wallet address, it's on this network or the other network. And so as with the mobile app I was mentioning earlier, you'll be using human readable names. So no longer do you need to remember a string of characters. Rather, you can use a username and you send that to your whoever you're sending the money to, and they can send that money back to you. And the other part of it is that all the complications with wallet addresses or the fees and everything like that, that's pushed a layer below. Blockchain's amazing and it works as it should. The problem is that it was too front and center for a lot of users, and it kind of held them back from using some of the features. So what we want to do is we want to help improve it and increase the experience that people have using a blockchain and crypto. So with that, we pushed it down a layer. It's safe and secure in a non-custodial wallet, and it allows you to reach the speeds that you want to send the money. So I think in terms of expanding the exposure, I think right now people feel that it's a little too complicated to use some of the systems, or they're not quite sure where to start. So we made sure, as I mentioned, to build a user-focused system. So with that user-focused system, it'll be familiar. It's going to feel like another peer-to-peer transfer app that you've used in traditional finance, but this one's going to be backed and built on blockchain. So that's one of the things we're excited for to roll out, is that people will start transacting and moving currencies in real time without having to wonder, are they doing it correctly? Where's some advice, or what online tool they need to know how to download? This is one app from the App Store, and it's safe to use, and you can start using it when it launches later this year.
Okay, awesome. I think that's a perfect segue into my next question, which is I've seen some benchmarks like up to 10,000 or more transactions per second. And then I also read that you guys have like a distributed acyclic graph, or DAG, as like the blockchain architecture. Sorry about that. So are you guys like a traditional blockchain, or you guys are a DAG basically?
Yeah. So traditional blockchain, with our goal for the TPS, and those are the milestones we're hitting, we realized that, not just in the traditional finance wasn't able to meet the certain goals or the milestones in TPS performance that they had hoped to. There was also issues when it came to other layer ones, but they weren't able to reach that throughput. Again, building a system that's built for payments allows us to focus in on what matters most. So we would say the sub-second finality is by far the most important part of it, because while there may be 10,000 transactions or 10 transactions a second, you're really focused on your transaction. So you want to know that your transaction is closing in sub-second finality, and that's what we're working towards. And so with that, there's a lot of R&D that we put into the payment-specific Web3 space. And so that infrastructure is what Stable is mandated to build. And so that's what our vision, and that's what we're going for. So referring to like the DAG-based consensus, what we're hoping for is that proof of stake that we're building is really going to help speed things up and ensure that we're able to transact in real time, and it's going to feel fluid. Again, right now, when people are using different technologies and we're seeing the advancement in AIs and the iterations, it felt strange to us that blockchain or stablecoin payments were going still slow. We weren't seeing that improvement. So when we built Stable from the ground up, that was the goal, is to make sure that we're building something that's going to be able to exist and future-proof it to make sure that we're able to transact in real time at the speed of the internet.
And to achieve that level of performance that you guys have achieved, were there any notable trade-offs in terms of like decentralization or user freedom?
No, we have a validator network that will be launched by the community, and that way we'll be able to have the same ecosystem that everyone's used to in a permissionless distributed system. We've been able to bring that forward, and so while there's a lot of work on our side, a lot of R&D went into this. I think that the use cases that are specific for our blockchain are what's most important, and we're able to make sure that we're executing those in a whether you're doing peer-to-peer or you're doing the enterprise level, it's going to be at that institutional grade of like security and also speed. Those are our two key focuses that we're doing on. So we want to make sure that we're delivering something better than already exists.
Okay, awesome. And then my follow-up question to that, I guess, is you mentioned community-run validators, but are you also like partnering with like businesses or other chains or anything like that for the validator infrastructure?
Sure. So like there's a whole longer conversation about this, but no, we're not. It's completely decentralized. There's the individuals or the teams that are running those validators. That's how that's going to work. We're really excited for how the system's going to grow and people are going to be part of this community, because we've had really good excitement so far, whether it's at Korea Blockchain Week where people came and met with us and we're excited to start building. So I know we're counting in days, no longer months, for our launch. And with that, there's going to be a lot of people who are going to be getting, their hands on this product, and they're going to start building.
Awesome. I want to get you to cover the details for the upcoming launch in just a moment. But before that, I wanted to ask you, like with the Genius Act and with the regulations in Europe, we have seen like stablecoins kind of get a green light from regulators, and now we're seeing like a lot of new players enter the stablecoin space. And there's like regional stablecoins that are popping up that are like MiCA compliant and things of that nature. I know you guys mentioned that USDT is the native token, but do you have plans to add any of these other stablecoin projects to the stable ecosystem?
Yeah, I think that's the core for layer zero. Is on day one, we're fortunate enough to have a lot of different availability. So whether it's USDT you want to transact with, or USDC or PYUSD, there's a whole series of different tokens that we're going to be available day one, and different assets are going to be available day one, because we're using that high speed technology that is very focused on growth and future proofing, rather than building something that's going to get stuck at one point in time. We're focusing on grand adoption rather than locking people into an ecosystem that isn't going to evolve and isn't going to advance.
In your personal opinion, like how do you see this playing out with all these like new stablecoins that are entering the market? I mean, obviously USDT is like the one with first mover advantage and the biggest market share, but like, do you see these other like regional stablecoins or regulated stablecoins kind of carving out a niche for themselves in their respective markets?
I think when it comes to regional stablecoins or new stablecoins, as you mentioned, I think what expanding my viewpoint is, right now we look at the existing AUM and how that's growing, and people think that and usually the focus is more of like a cannibalization of the current market where people move from A to B rather than creating new value. I think what those coins are going to focus on is building new value or new use cases or specific use cases that aren't being able to be applied with the current tools. So I think there will be an expansion in terms of the number of tokens that are available. And I think over time, if the use case isn't strong or the value prop isn't there, then obviously those may, change their focus, or they may, exit the market. But I definitely think there will be other tokens out there for specific cases. So whether it's regional or it's, a different jurisdiction, there are definitely going to be use cases out there. And so I think we're excited about that, because that's showing that stable coins are being able to be adopted, are expanding. And I think, if a regulation comes in from a certain jurisdiction and there's compliance that's done there, examples USAT, the U.S. government put forth the Genius Act, and there was requirements there, and so Tether was able to take the initiative and build out USAT, or launch USAT with Bo in charge. And so that's kind of one of those examples of like there is a specific use case for that stablecoin, and it's not going to necessarily cannibalize the market. It's going to create a new market. So I think with as regulation increases and the use of stablecoins increases, there will be new markets and there will be opportunities for new stablecoins to exist and to grow.
Okay, thank you for that input. You don't feel that there's a risk of like fragmentation of the stablecoin market by having like 200 different like US dollar tokens?
Oh, sure. I would say, an excessive number of anything is not good. And I think that's where market competition and market strength will dictate what the survivors are. So I think obviously we're not launching a stable coin, so I'm not super
You're
focused
kind of
on like,
agnostic.
yeah. But I would say, I think as you can kind of understand, it's really going to be focused on like, is there a value prop? Is there a market for this? Just saying that you're launching a stable coin that's another US dollar backed stable coin doesn't mean you're going to get market share. And I think it's expensive. I think that you look at USDT and the work that Tether's done is they really focus on building a super product. That product isn't just the largest, it's also battle tested, it's grown, it's proven itself, and it has the deep liquidity that's necessary to keep it at a growing pace, not just the largest, it's still growing. And I think if you're going to enter the market, you really have to do some soul searching as a founder to understand, like, is there a market for this? Am I providing value? If it's a comparable product that is going to be smaller market share, obviously that the barrier to markets there with the existing players. But if you're really setting out something that's unique and not existing in the current product offering, and there's a hunger for it, then obviously those are going to have some success. But whether or not to predict who's going to win or who's going to grow, I support everyone doing it. But I would say basic economics in terms of like who's going to have the barriers to entry and who's going to have market share that they don't want to give up. I think those are things that are going to be in play in just real time that we'll watch unfold.
Okay, thank you. It seems like most stablecoins are US dollar denominated. Are there any other currencies that you see potential for stablecoins, like a euro stablecoin, for instance, or I don't know, just any other national currency that you see a good fit for a stablecoin?
Yeah, I think a lot of governments have started flirting with the idea of putting forth regulation to allow a certain currency to exist, their currency to exist in a stablecoin setting. And I think as more governments get on board or use the reciprocity of Genius Act, I think that is going to be very fast to act. I think those regions or those countries are going to be very eager to get on board and launch a stable currency backed by the local currency, because I think it provides a lot of value. And I think its ability to move very quickly in a global sense. So I'd say it's as the framework. I think people become more comfortable investing in those stable coins based on the government's protection of it, where there's a little bit more transparency in terms of how they're operating, an audit or things like that. So I say that's where USAT is getting all of its attention right now, is that people who knew they wanted to have something but wanted a financially regulated product needed, like a bank needed a little bit more clarity in like what's going to be there, because they need to be able to tell their end users where they're putting the money. So I think that's how you get the onboarding. So I would say hopefully there's other countries who want to take action like the Genius Act and put forth regulation that encourages the development and teams to get busy building something similar to USAT.
Okay, thank you. And then my final question is, we know that there's like a CBDCs on the horizon. Like 80% of central banks are all doing research on how to launch CBDCs. How do you see this like head to head between stablecoins from private companies versus like state-backed digital tokens?
Sure. I would say one of the friction points that's always existed is the centralization, or in terms of like small players controlling the market or controlling the network. I think there are different use cases for different types of chains: permissionless, centralized, decentralized. And I think what's going to happen is if a bank network wants to build their settlement layer between banks and between parties for them to move off of an existing system such as Swift, then that's something that they're going to move forward with. but I don't think that's the replacement for doing Swift transfers to end users. I think that's more of a settlement layer for those banks and not necessarily replacing peer-to-peer transfers, because I don't think that they're going to open up those systems or those internal networks for end users. It's going to be records that are originated on their side from point A to point B, rather than being a public network that anyone can build and anyone can grow on. And I think, looking at the current AUM of stablecoins right now, I don't see those people holding those tokens wanting to move overnight to another centralized system, because obviously they were frustrated by the previous central system that they were on, where it wasn't providing the service or the time or the fees that they were looking for. So they embraced a new technology that was faster, better, and cheaper. So I don't see people regressing backwards and going into a system that isn't really focused on serving them the best.
Okay, awesome. Well, thank you for that perspective. Brian, we're running out of time, but I did want to get you to discuss the upcoming launch of Stable. And then could you also give us like any pertinent social media links and things of that nature?
Sure. So as I think we mentioned before, starting at KBW, we were happy to announce that we have a mobile app coming out that's going to be aligned with our go-to-market strategy. So that go-to-market strategy includes some exciting pieces as our mainnet launch, but also getting up those peer-to-peer transfer payments that are going to be gas-free. So all that's taking place in the next coming weeks, and we have a series of really exciting announcements with collaboration teams and other exciting things that we're launching. So we're going to be pretty busy. So you can check us out on X. We're just Stable, and from there we're going to be doing the announcements. But also, if you want to check us out on our website to get more information about our docs and also some of our other links, you can look at stable.xyz.
Amazing. Thank you so much. Real quick before we go, like, what's the date set, I guess, for the launch?
So that date is going to be a big announcement. So I don't want to give it away just now,
Okay.
but
Sorry about that.
it's days, not months. So I would say follow our Twitter, and you'll get the updates in real time. And we're excited to kind of publish that date in the very very near future.
Amazing. Well, thank you so much for taking time out of your day to come on the show and talk to us about Stable. Is there any final thoughts or final statements you want to leave with the audience?
Yeah, I mean, I just want to leave everyone with the idea that the friction we currently have in terms of using stablecoins and also transferring money globally, we're looking to change that. And I think that everyone is going to, whether you're currently sending money using stablecoins or you've been interested in doing it, I think we're going to be changing that. And we're really excited to have everyone give us a chance and also explore the features that we're building into our mobile app and changing the way that money moves at the speed of the internet.
Cool. Well, I'm super excited with what you guys are doing. I know Bitfinex are big supporters of your guys' project. So thanks again for coming on the show. It was a pleasure talking about Stable with you.
Thank you, and thank you to Bitfinex. We're excited to be part of the team and excited for the launch later this year.